Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Thursday, April 21st, and this is your end of day market recap. Risk disclaimer in front of you. Everything that we're going through is for information purposes only. You can read the full risk disclaimer right here. So pretty much, easy theme for the day. Just complete kind of sell-off type day, sell the rip. Very, very tricky when this market opens up, as much as it was, which I think was around 1%. The Qs were up even more, and just, 3.2% sell off from the open. So to finish the day, just down over 2% for the session. I mean, that makes things really difficult. But this is what we've been dealing with all of 2022, right? If you've been trading through this year, you know how difficult this market has been. It seems like there's been a couple times where this market has tried to turn higher and just kind of gets hit with a thump. If you're looking for a catalyst or reasons for it for today, the Fed speakers, I don't know. I think Powell spoke twice today. He was at one meeting and then spoke. Janet Yellen spoke today. She was speaking at the same time. Bullard spoke today, all with the same message, all with the same message that basically they want to see, prices lower, I don't think they're specifically talking about stock prices, but they are talking about just prices and inflation, and those things lower. So they've been doing this now for a while, where they've been trying to talk things down more than their actions. I don't really want to get to a debate about that in this video, because I want to keep this video short, as I've been sick all week long. So one of the things, I see bonds were down today. They were up 2.3% yesterday. They didn't get much attention. It's funny how that happens, but I don't think really the move in bonds was the catalyst for the day. I just think that we hit a little bit of resistance. Let's start with the NASDAQ just for a minute, because I think that's where a lot of the attention is. If you are familiar with the indicator that I use, right, which is the TTG Market Webs, which gives you a sense of where there's resistance. I call it a roadmap, resistance support levels. We did hit that 1 hour top of value. That's the second time that we hit that this week. I tweeted that out and said, hey, we've got a pretty decent test. They're at 14,248 in NASDAQ futures, or you could use, it's the same thing for the Q, different level for the Qs, but very similar. And we got absolutely rejected there again. So we did go and we got back to basically where this version point of control is. Right. So we're kind of back to this level. And, this continues to be the weaker of, I mainly look at NASDAQ and I look at S&P. I also look at IWM a little bit too, but IWM has been so difficult and kind of trendless that I'm really looking at the two of these. But, here's where we are, 1 hour. So we're a little bit below the week's we're a little bit below the week's lows. And if we look at the daily chart, right, one of the things that I've said a couple times is that I've seen people draw this inverted head and shoulders. I don't really like when people do that, to be honest, because there's no confirmation. They're just drawing pictures, basically. So what do we notice here this week, right? And again, to look at these things as objectively as possible, right? We've hit this 50-day moving average, right? Which is a big thing. 50-day moving average, 200-day moving averages are important. We've hit this and we've tagged this a couple times, and we've failed each time. Right. So that there may be some type of inverted head and shoulders that plays out over time, but you have to wait for a little bit of confirmation. Right. And just drawing pictures and saying like, oh, this looks great here. Right. I mean, anybody could do that. Right. So we're below this. I do see that the 80% rule is still in effect. Right. Obviously, today is the 21st of April. We only have so many days left. But there is also a chance that we could gravitate towards the bottom of value. It's pretty amazing when you look at the components of the Qs, right? It's only 100 names that are in the Qs. right? And if you look to see what the names were that were performing, you forget some of the names that are in here, right? So when we look at this, right, some names are holding up fairly well. Tesla was up on earnings, even though off the highs. We'll talk about Tesla in just a second. There are some names that are holding up, and if you go through these names, you'll find them. But there's other names that have not even close. They're not even closely putting in a bottom yet. They're continuing to move down and go lower and lower. So let's talk about two other areas, and then I'll get to also the commodity move too, which was not particularly good. But Tesla, the one thing that I've noticed here, and I said this actually on today's, when Tesla was around the highs of the day, I said, one of the things that I've been watching here is this trend line that I've got drawn, right? So it's nice that Tesla's holding up very well like this for a growth stock. And they had good earnings, but the issue is that the pattern right here is lower highs, right? So we'll see if this could get out of here. And the fact that it's hanging in here, again, I think is pretty good. It's not breaking down either, but it's moving sideways. So this could be like a potential leader once we get out of this period of tightening with the Fed, but that may take a while, right? And that may not happen for a while. So some of these things, I think patience is required. And selling the rip certainly has worked well in some of these areas that there's just higher multiple names. All right. Another area that I was going to talk about is ARC. This is now down. What does my spreadsheet say? Right, so if you look at the right, ARC is back down 44% year to date. This, folks, and I try to teach this as much as possible, but this is what happens when you don't change your perspective, when you don't make any adjustments and you just continue to say the market is wrong and you are right. You often have this type of performance, right? Not every time, but stubbornness, I say it all the time, stubbornness in trading is not a good thing, right? So again, there's a fine line between having high conviction in your ideas, but respecting that you're not bigger than the market, right? So this is very close to the lows, down this much per year. Another thing that I find pretty crazy right now in this market, and we'll talk about I was going to talk about the commodities, but I see so much hate over Jim Cramer these days. I don't really watch Jim Cramer as much as I used to, but I see people pulling, tweets from him from January or from a year ago. I don't think that's particular. Listen, there's reasons why you may dislike him or like him, whatever, but pulling tweets from a year ago and saying, hey, he said this a year ago or in January. I change my mind every single day. I change my mind week by week. You have to adjust to the market. So I'm sure if you went through my tweets and said, hey, I like this stock 6 months ago, right? There's no way that that was a good pick, because this market has changed so much. So, and again, I don't know if he said these things 3 months ago, 6 months ago, and he's saying the same things now. That would be a different story. If he said, hey, these are the 5 or 6 stocks to watch, right? If he said that in January and he's still saying the same thing as these are the best stocks. But the fact that people, I think that are not familiar with making mistakes in this market, right? And thinking that they have a crystal ball, right? This market is very difficult. And I think people are really going to learn their lesson from that standpoint to say like, hey, I'm right. And I'm going to make this prediction and I'm not going to make any adjustments as the market changes, right? So I just thought that was kind of interesting to mention. I don't know why the piling up of anger, about him. I get it. Some people may have lost a lot of money if they're not, making adjustments and changing what they're doing. But, that's what it's all about. I've been through a few of these market, downturns like this. I started my career back in 1999 and 2000 when the tech bubble happened. I traded institutionally when we had the credit crisis, when that happened, right? And you would go through days where, it would be like this. And the best thing to do is to be out of it, right? And not be in, trading against the market. So that's basically what I try to do. That has helped me a lot over the last few months. And days like this was not a good day for me. But I say this all the time. I'm okay, like, it happens. You're going to have a bad day. Turning over to the S&P. My goal is not to have a bad week or bad month, right? To turn that into that. So if you look at what I did for the day, right, I liquidated, even a lot of the things that I was talking about yesterday, talking about energy, talking about some of, a lot of the commodity plays, a lot of the agriculture names, right? I was in CCJ, right? As soon as these things, and I didn't catch them perfectly, but this is into support, but it's just the market's moving too fast to just stay in trades. This was down 10% today, right? So I got out of this, once it gets close to, but sometimes I don't catch it right before it gets to my cost basis, but I took 2 targets in this one yesterday. This is another CF. I took 2 targets in yesterday as well. See, I didn't catch this one before my cost basis, and sometimes I do give them a chance to come back. But if, this was another one down 6%, it's just too much. The market is still moving too fast, right? Down a normal day in something that you're holding, down 2 or 3% is one thing, but some of these names down 6, 10%. This LAC, which I'm not in, but just was watching, down 13%. Most of these stocks, and I know everybody always, if you're a new trader, sometimes you're thinking that, what was the news on this stock that brought it down 13%? So it's just, sometimes there is no news. It's just the fact of people wanting to sell and sell quickly. Another question I always get all the time, when somebody goes down, what's the news? When the stock goes up, never get any questions about why the stock's going up. But when it goes down, what's the news? So that's a pretty good rejection of this name. But yeah, so I mean, I talked a lot in yesterday's video about buying dips and uptrends and so forth, but you do have to watch when things, when the trend changes a little bit. Now, I don't know if the trend is changing in the commodity plays or in the energy plays, but I know that I'm not, if I see something I don't like, I just get out of the position, right? And then reassess. So that's where I am right now in terms of this market. Out of many positions. Now we'll watch and observe a bit, right? Market, like I said, market just moving a little bit too quickly, right? To be able to kind of ascertain if it's more than a one-day correction or if there's something else going on. We go back to the S&P. Another theme, and probably this is where I'll leave it for today's video, is this S&P chart continues to be very sideways, right? We're just below the 200-day moving average, right? So I think it's important too, right? If you're shorting things that are in downtrends, that trade has worked. If you're buying things that are in uptrends, that has also worked pretty decently. But for the overall market, right, I think it's important not to have what I refer to as doom and gloom, to be too bearish or to be too bullish too. I see that all the time. Whenever the market goes up, people are doing backflips and saying, and acting, pretty cocky about the situation. I don't think this is a market to be cocky in either direction, especially when you look at how sideways it is. All right. So that's kind of the end of day message is, try not to get really too over the tips of your skis with your mindset in this market. I think it has been, and it continues to be, a very tricky market. I think if you're over positioning, right, or too far on one side of the spectrum, that's really where you get hurt in this market. And I think you just have to kind of stick with this market is telling you right now, that it continues to be tricky. Also with earning season, in general, I think it's very difficult to swing trade during earning season. I think it's better to kind of observe more, and realize what names might come out of this earnings cycle as potential leaders, and what names might continue to kind of act as drop from the leadership area, right? And are names to avoid over the next quarter. So really, that's what just comes with patience, right? And just watching, because I do think I don't know what percentage we are through this earnings cycle, probably around 25-30% through this earnings cycle. You're going to find names that are going to be potential leaders for the next quarter. All right, guys, I'll leave it there. Have a great night, everybody. See you tomorrow.